Are you self-employed using your personal car for business? You are probably wondering, can I claim fuel? What about insurance, MOT, repairs? Can I use mileage or actual cost? Well, today I'm breaking it all down in simple terms so that you can save tax and claim every penny that you are entitled to. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. Let's get started. So, who can claim motor expenses or vehicle expenses? If you are self-employed, whether you are a sole trader, a small business owner, or a freelancer, you are allowed to claim business expenses for use of your personal vehicle. This includes cars, vans, motorcycles, or even a bicycle. So you can claim the business proportion of the car running cost. There are two ways you can claim. The first method is called Simplified method. With this method, you can claim a flat rate per mile according to HMRC's rate. For up to 10,000 miles, you can claim 45p per mile, and then any mileage over 10,000 you can claim 25p per mile. So for example, if the total business mileage for the use of your personal car is 20,000 miles per tax year, for up to 10,000 miles, you can claim 45p per mile. You can then claim 25p per mile for the remaining 10,000 miles, giving you a total mileage to claim on your self-assessment tax return of 7,000. If you choose this method, you cannot claim any additional car running costs such as fuel, such as repairs, such as MOT, or any of the other running costs of the use of your personal vehicle, because the mileage covers all these. Again, this method cannot be used if you have previously claimed capital allowances on the car that you are using for business journeys. That is the simplified method. The next method is actual cost method. With this method, you can claim all the running costs of the use of your personal vehicle for business purposes. But remember, you can only claim a proportion of the business use of the vehicle as a running cost. However, you cannot claim penalty costs or fines that you receive for the use of the personal vehicle for business journeys. Even if it's a business journey, fines and penalties are not allowable costs, and so you cannot claim the business portion of such costs. You need to ensure that you have evidence for all the costs that you'll be claiming. So for example, if the total running cost of the car is £10,000 per tax year and the business use portion is 70%, you can claim 70% of the total cost of £10,000 per tax year, and you can claim £7,000 in your self-assessment tax return. Any of the methods you choose to use must be used consistently. You can't use the first method one tax year and decide to use the next method the next tax year. So now is the major question: which of the two methods is the one to use? You will need to assess this carefully. Your aim is to reduce your self-employment profit, leading to a reduction in tax. So whichever method gives you the highest cost that will reduce your profit, leading to a reduction in tax, should be the method you want to use. However, in practice, according to the kind of clients that we have noticed that using the actual cost method tends to save you more money in tax. Every situation is different, so speak to your accountant to do this analysis for you to know which of the methods will save you more tax. If you decide to use the simplified method, whereby you use mileage, you need to keep mileage log that will identify the date, destination, and the total miles per each journey. This log must be kept as a reference should HMRC ever request for them. You need to keep receipts and all evidences relating to any of the costs you decide to use. There are various common mistakes that you need to avoid. The first one being claiming 100% of the running cost of your personal vehicle. Remember, if you're using your personal vehicle for business journeys, you can only claim the business portion, not 100%. Another mistake you need to avoid is not being consistent with the method you choose to use. As I said, be consistent with the method that you decide to use. Another mistake you need to avoid is not keeping mileage records. Again, another mistake that you need to avoid is not keeping any receipt or any evidence at all for any of the costs that you decide to claim. Without receipts or without logbook as an evidence, HMRC may reject your claim on your self-assessment. So it's highly important to keep all evidences relating to any cost you claim on your self-assessment tax return. As always, all our videos are for education purposes only and should not be used in any way as a personal tax advice, accounting advice, or any kind of advice. For personal tailored advice, please do contact us using the details in the description or speak to your advisor. I hope you found this video useful. If you did, don't forget to subscribe to our channel for more tips that will help you save more tax. Don't forget to hit the like button telling us that you've enjoyed this video. Thank you for watching.